Welcome everyone. Today we're going to discuss about some of the interesting things what's going on in the COVID period. And most important thing is that I'm going to discuss that how it's create impact in different countries. And definitely this kind of presentation I get support from Jeffrey Frankel's Harper Professor of Capital Formation and Growth, Harvard University. So what the major points I'm going to discuss today? Although health and economic impact of the pandemics have spread to virtually every part of the globe, severity has variety wide. So access continents and across countries. So different continents and different countries, it's a different kind of impact. And not always, it always that would have been predicted. It's not, and most important thing is that it is not too early to drown some lessons. Surprisingly, death rates have been worse in USA than most of the emerging market and developing economics. And this is the challenge for the USA, and this is the challenge for the developed countries now facing for the COVID-19. But economic impact will be more extensive among emerging development economy, and in particular, they lack a fiscal space of response. And the trade-off between health and the economy is illusionary. So a most important part of that, like example, if we lose our healthcare system, that time we can lose our economic economic positions. And all of the emerging economy, especially the developing economy, they have more engagement, and they have different kind of engagement with the developed economy. No sign of trade-off between economic growth and health country. And GDP growth rate in 2012, confirmed death per millions. Let's say economic decline the second quarter of 2022 versus rate of confirmed death due to COVID-19. So this is the situations we are facing right now. There is a GDP growth 2022 Q2 from previous year. So in that particular situation, we have UK, we have Italy, Chile, United States, Netherlands, France, Colombia, and many more countries. So in that particular situations, what we have to do, we have to understand the real GDP growth. We have to understand the real economical impact. And if we can understand the economical impact, we find that many of the country GDP growth is negative. So we have to be very careful right now. Of G20, India economy was the worst hit in Q2. So flogged by UK, Spain, Mexico, China, and Korea did the best. If you see that China is in that positions, second quarter, they have 12.3 growth. Korea, they have minus 3.2. India, they have 6.9. Australia, they have minus 7. Japan, they have minus 7.8. Russia, they have minus 8.9. USA, they have minus 9.1. Brazil, they have 9.7. Turkey, they have minus 9.7. Canada, minus 11. European Unions, they are minus 11. Italy, minus 12.8. France, minus 13.8. Mexico, minus 17.1. ESP, minus 18.5. GBR, minus 20.4. India, minus 25.6. These are the major impact we are observing according to IMF 2 September report, that these are the major impact are happening in the COVID period. So Peru recession have been end worse than Spain and UK, while Taiwan has suffered the best, followed by South Korea. So if you see this data that South Korea and Taiwan, they are playing, South Korea and Taiwan, they are playing good economic decline in the second quarter of 2020. On the other hand, United Kingdom and Spain, they are not doing very well. So why difference across continue in the COVID-19? Why has Latin America been hit so badly? Half of the global summer death. Big density population cities, informal workers, interland migrants, inequality, inadequate public health systems. This is the major systems and major issues for the Latin America, there is a lot of heat in the COVID period. On the other hand, why have Eastern SE Asia done the best? So East and Southeast Asia done the best because in part cultural willingness to wearing mask or quarantine. So in the Asia Pacific market, they have a major things that they want to go for the wearing mask and they go for the quarantine. Recent experience with the epidemics, good habit of response, Western Hampshires and Europe. Why has Africa apparently done better than expected? Again, experience with epidemic, habit of response. Like African people, they have a good response and they have a good habits, low population density, and most important thing is that young people. When you have the young people and the young community, that time COVID-19 do not hit them in that way. Why difference with the continent? Air hub air hit fast, Milan, London, New York, Johannesburg. With Latin America, three doing especially badly, Brazil, Mexico, Nicaragua. Why? Poor political leadership. So there are especially Latin America, if we see that there are many challenging political situations, and they are challenging different kind of economic situation, which is actually really really effective sessions for them. Within Latin America, three doing badly, Brazil, Mexico and Nicaragua. uh, the three president repeatedly deny seriousness of the coronavirus and discourage testing and mask wearing. So when the political leaders, they are not aware about this kind of things, then that times this COVID-19 will create impact. Uruguay is doing it right. Many tests, few cases. So Uruguay, on the other hand, in Latin America, they take it very seriously. But then, in case like Peru, it is hard to say what they have done wrong, and yet suffering badly. So there are many reasons. Maybe political strategy, healthcare strategy, proper caring about themselves. This is the major things that they are facing right now. Within Europe, UK leadership did not take the situation seriously enough. UK has done poorly. So when we observe the UK, they have different kind of challenging situations and they do not take it seriously. On the other hand, Germany leader did take it seriously and has done well. Economic impact. So if we focus on the economic impact, this is very important. The economic outlook will overall be worse in EMEDES. So if we see the emerging market and developing economy, their impact is not so bad. They are in positive growth. It particularly due to lack of fiscal space and relative to the US and Europe, who have been able to respond with unprecedented fiscal spending and monetary expenses. Initially, global investors switched to risk of a polluted out of EMEDES, emerging market developing economy. EM asset price recovering in spring and summer. So their asset price and these things is economy. But how long before the financial environment turn against EMDS? This is very important discussion for the today's session. Most important thing for this pandemic, we can understand and we can realize that we can take different kind of situations in a positive way. Let's say if we have a better policy so far in pandemic, then we can overcome from the situation in a positive way. In a coronavirus countries suffer worse overall where government doing COVID-19. So suppressing statistics, failing to promote mask and testings, or reopening early after a shutdown, whether for economic or political motivations. The presumed trade-off between protecting health and protecting the economy is illusory, despite the belief of some political leaders. EMED difficulties, financial defects, fiscal response less in low income versus advanced income economy, high debt and high spread limit fiscal space. Capital outlook follow February 2020 shocks. Risk of from February. EM asset price have recovered for now. Downgrade of sovereign debt. official flow have helped, and IMF financing. These are the different issues that EMED difficulties, financial defects. So if we see, while the spreading response of advanced economy has been massive, low income countries lack the fiscal space. Like advanced economy, discretionary fiscal measure, loan guarantee and other credit measures. Advanced economy, like they have, according to IMF, and low incomes, this is the cash injections, government fiscal response to the COVID-19. So this is the in the blue, deep blue is discretionary fiscal measures, and this is the loan guarantee and other credit measures. And this is the middle income countries. Middle income countries is in good shapes, and it is the low income countries, because low income countries, their fiscal measures in good, and they do not have enough loan and guarantee. So if we do focus on these things, that little space to run budget defect among the EMDS that entered 2022 with his depth and GDP that saw high sovereign spread when the COVID-19 recession hit. So in COVID-19 response, the emerging market economy, conventionally policies and beyonds, according to IMF blog. So in the IMF blog, what we observe a worrisome lack of fiscal space. One third of the emerging market economies have limited or no room for fiscal policy to counter a prolonged crisis. So this is x-axis, this is the y-axis, depth of GDP, and this is none, this is some in substantials. This is different kind of debt issues we are observing, and this is the source of Bloomberg, EEO, and database of IMF staff calculation. On the other hand, if we focus on the portfolio outflow from EM when the COVID-19 crisis is exit outflow in the 2008 GFC or 2013 taper tantrums, there is a portfolio. This is x-axis, this is the y-axis. So the x-axis, there is a portfolio, GFC, COVID-19, taper tampers, and there is a y-axis. Y-axis, there is a negative things. So this is actually happening right now. The black thing is a GFC, September 2008, COVID-19 middle February. This is the COVID-19 February, which is negative, and taper tantrums. This is the things May 2013, and this is the negative growth at present happening the emerging economy. Risk of the VIX rose sharply from February 20 to March 16, 2020, hit EM asset among others. So if we focus on the x-axis and the y-axis, the x-axis is that the September 17 to 2020, there is a different kind of things happening, and the source is the Chicago Board Opinions Exchange, and this is the risk of VIX. And in this situation 2020, risks are going high and high for the all of the economy. Also, if we can focus on the March EM assets price hard recovered, but can it last? Let's say there is a share price is decreasing. On the other hand, bond price is decreasing, and sometimes it's increasing, and the currencies market is like this is the March EM asset price have recovered, but can it last? In the March, like this bond currencies and these things, they actually going down, but after that they are growing in their economy. Downgrade of sovereign debt in 2020 exceed 1982 international debt crisis and 1997 to 1998 Asia crisis, 2008 to 2009 GFC, etc. According to J. Bowles, C. Reinhardt, Rogers, and Rebert, the debt pandemic finance and development fall 2020, and this is the ultimately the source that how we can measure the economic growths and everything. So this is the when the EMDES lost private capital inflow officials flow helps. J. Brown, C. Reinhardt, K. Rokoff and the things, multiple lifetimes. There is some mass that after the February, the private international capital flow is going down. It is going down from more than 50. It's now is 250 billion dollars. So this is the official international capital flow. The IMF, World Bank, regional banks. These are the official cash flow, and this is the multiple lifetimes that quick funding by multiple helps offset a collapse of the government revenue and the withdrawal of the private capitals. These are the things we are observing right now. At present, the pandemic situations, if we focus on the IMF has provided financial assistance to about 80 countries in September, and mainly through emerging leadings and the precautionary lending tools. And by this way, they have argumentation of existing arrangements, and this is the RFI or RCF, and this is the new arrangement 8.6%, and they have the argument of existing arrangements. So IMF financial assistance so far has focused on emergency financing and precautionary lending tools, and this is the way actually how we can overcome from the pandemic situations. I believe that if we can understand these sessions, at least you can understand the global scenario. So, and in these pandemic situations, you have to understand there are many global organizations like World Bank, IMF, and regional bank, let's say Asian development banks. These are the banks actually, they are supporting a lot to those different kind of banks. They are supporting a different kind of local ecosystems. On the other hand, different kind of private equity and the private firms and these things, they are not getting enough supports and enough things. So in that particular situations, if we can make a proper relationship, if we can take a proper initiative, and by this way we can handle the local ecosystems. And this is the ultimately the objective of school of talent economy, that we want to share the real experience and real informations. And these today's sessions actually, we are sharing from the Harvard University, and hopefully you can understand. If you can understand the session properly, you can take different kind of economic measures, and which is very helpful for the economy. So if you have any kind of questions, you can ask me. I want to give special thanks to Shahrukh Shumons and Mohammad Sohail Rana for your continuous support. So hopefully by this way we can understand different kind of economical impact, and this is the ultimately objective of School of Talent Economy, to create necessary demand about these things. Hopefully we will share more sessions about the present pandemic situations and about the crisis. Thank you very much, and I want to request to all of the emerging economy, all of the developing economy, you should work together. When we work together, there is a more chances that we can overcome from these pandemic situations. So thank you for all of your support and everything. Hopefully tomorrow I can come with a different topic and different strategy. Thank you very much.